Can you see my grandson?
Yep.
Yeah, there he is. Young Owen. He lives in Australia and he's actually got made to measure overalls on there. His father is an engineer. And Owen is only 16 months old. Let's think about Owen, a young Owen's life here. He'll probably start work when he's 21, if he's not become a sort of surfer dude by then, and retire when he's about 67. And that will mean he's got a working life of 46 years. The scary thing is that turns out to be 552 months. That's all it is. And in that time, we have to do a lot of things. He's going to have to buy a home, raise a family, take holidays, drive some sort of vehicle, although goodness knows what that will be by the time he gets there. And he'll also have to finance his retirement. And all of that with only 552 paychecks. So don't worry, I'm going to help Owen. And let's say, it's a theory this of course, that I give him £1,000 now when he's only 16 months old towards his retirement. And so if we do that and it goes into his bank, and he'll be lucky if he gets 1%, but let's say he gets 1%. How long does it do? Does anyone think it would take at 1% per annum to double £1,000 into £2,000? I can tell you this, it's a very simple formula. You take the number 72 and divide it by the interest rate involved. So obviously 72 divided by 1 is 72 years. That's how long it would take if I give him 1,000 now to double it. So he would be 73 and 6 months or whatever before that 1,000 with his 1% per annum became 2,000. However, that would be a miracle if it got to 2,000, not because he'd just spend it, but we're not taking into account inflation and we're not taking into account tax. He would probably never get to the 2,000 in his lifetime, even if he has a very long life. So it's probably not the best idea. However, don't worry. My daughter, Jo, his mother, is a member of 2 of our investment clubs. And I've got no doubt that young Owen will become an investor too. So what if we put that £1,000 into one of our clubs? What can he expect then? Obviously rather better. And here's where we are on the clubs. This was as at the 29th of October, which coincidentally was my birthday, but it was also the last trading day of October. And these are the 4 clubs that I currently look after. So the first one that actually started was Tees Traders. That started, and it's still going there. People put in £100 per month. And because it was only £100 per month and it was limited to 20 members, it took them quite a long time to get going. But they have got going. They've been going now 24 months. The cash in that account, they put in nearly 50,000, but there's 83,500 in cash in there that's come from their trading. So the cash is 167% of what they started off with. So their doubling rate is 14 months, not 72 years, 14 months. The second club that we started is Fortune. They've invested the members between them 160,000. It's worth, there's cash in there now of 80,000 on top of that, 50%, and the doubling rate is also 14 months. Then we have Sapphire, which anyone who's looking to join today probably would end up being in Sapphire. They started off big and they've put in 293,000, and up to now they've generated 110,000 of cash. That's 37.7%. However, they've only been going for 2 months. So their doubling rate is 5 months, 5.3 months. And finally, the big guy, Diamond, they've invested 450,000, They're 79.5% cash on top of that. And they've been going 8 months and they have a doubling rate of 10 months. So that's the sort of figures that we're actually generating. Between these clubs, there are it's just under 250 members. Anyone can join any of the WhatsApp groups of these groups and chat to the members and check out what we're saying and ask how we do it. Those WhatsApp groups are not moderated, so I don't sort of see or interfere with anyone's questions or answers. They put in what they want, ask what they want, and the answers come whatever people want to answer. So you're very welcome. On request, we'll put you in there. And you can choose one at random, and you can choose any of the members you wish to speak to get in there. But they're obviously very happy. If they're not very happy now, I don't know what I can do to make them happy. So what's our secret? How can we do so well? We're doing better than Warren Buffett. He's just been going longer. But Warren Buffett, for example, owns 10% of Coca-Cola. So that's a huge amount. And what he can't do is decide that this week, he doesn't like it. He's just going to sell some of his shares. And in a few weeks' time, he'll sort of decide he does like it. He'll buy some back again. We can. So we're very, very agile compared to the big guys. And we can also do things that they simply can't do. There are actually 4 things that we do. These are the 4 ways that we make all that money. First of all, we just have stock price appreciation. We own shares and they go up in price. That's not news to anybody. Anyone is capable, as long as they can find the right shares, of enjoying that. Secondly, we actually get paid to buy shares. And I'm going to show you a demonstration of that. And we also get paid when we sell shares. So we don't just get the price of the share when we sell it, we get a premium on top of that. And like anybody else that owns shares, when we own shares, we also collect dividends. So they're the 4 things that we do to actually make money. So let's go a little bit deeper into that. So first of all, price appreciation. So if we were to buy a share for $10 and it goes up to $20, obviously we've made $10 100%. That is called buy and hold. That's what good old Warren Buffett does. He buys his shares and he holds on to them. We don't. We look more like that. So we buy at a low point, then we sell, then we buy, then we sell, then we buy, then we sell, then we buy. And in doing that, instead of just going up by $10, you'd expect that to go up by something like $17. So again, agility. We're in, we're out. We're in and we're out. And we'll see a real life example of how that actually works. And here it is. So this is a company which you probably heard of, and you may not realize what's happening with them these days. The company is BlackBerry. The people that used to make mobile phones, sort of organizers. No executive worth their salt could be seen without one. And the red and green flecks on this, they're called candlesticks. And each one of those candlesticks represents price movements over a day of trading. The green ones are where the price started at the bottom of the candlestick and ended at the top of the candlestick. So they're up days, the green days. The red days are when the price fell. This went over 3 months from A on the left-hand side to B at the top there, and it made 23.68%. That's $2.25 in 3 months, which is not a bad return at all. If you annualize that, it's 100% or near enough. However, what we can do is buy at the bottom and then sell at that point, which also, by the way, made $2.25. So if you were agile, you could have actually made that money in about 2 weeks. Then you let it come down again, you buy it again, you go back in, and we made another dollar. Then it comes down again, we get back in, and we made $2.35. And then finally, we sort of reached a low point again and got in, made $1.25. So that was actually $6.85, 72% in the same 3 months. So that's what we get on price appreciation for being agile. However, I've got to tell you that price appreciation is probably the second lowest. So dividends are probably the lowest. We don't collect very much in dividends. Price appreciation is good, but it's only number 2 out of 4. Here is the big one. We get paid to buy shares. This is an example. We'll look at another one in a moment. It's a company called Fluor Corporation, the biggest construction company in the USA. The US government have just announced that they're going to spend 1.75 trillion on infrastructure. A very good proportion of that money will come to Fluor. They'll actually get it. So what are we talking about here? The current price is $23.15. We could make a promise to say, look, we'll buy these shares from you in 3 months' time. And let's say we took that top figure there, $30. So if we say we'll buy it for $30, they would give us $5.80 now. If we say we buy it at the other end, $37.50, they'd give us $12.40 now. And that's where we make most of our money. Because what happens is, in 80% of the cases, the price in 3 months' time, if we do that $30 one, will be higher than $30. Therefore, they're not interested in selling the shares to us for $30. They can sell them to the market for whatever price it is. So we just keep the $5.80. So we haven't bought any shares. We haven't actually spent any money as such. All we've done is sold a promise, and we got $5.80 for it. $5.80 or $9.40, depending on where we think the price is going to rise. Here's an example that I've just looked at from this afternoon. The company is WDC, and that's Western Digital Corporation. There's a fair chance that the hard drive on your computer will be made by these people. As with lots of the companies, we're always on the US market, and we're on the US market because there's more information, it's cheaper to trade, and you can do this type of trade, whereas you can't in the UK. So Western Digital Corporation at the moment, current price is down here. Its price is $56.30, $56.16 on there. There was a time difference between me doing these two things. Now, we think that there's a fair chance that this will rise. It's been down and it's actually come up. There were some results, and the results weren't quite what they thought. There could be 1 or 2 cents out. The underlying company is very strong, lots of cash in the bank, low debt, very good sales, very good forecasting of profits, etc. And they're good at actually getting that right. So even if it went up, we think it will get back to 75. But we won't rely on that. We will say, okay, let us promise to buy the shares at 65. So the 56 at the moment, we think they're going to 75. We will promise to buy them in 3 months' time for $65. And if we look at the line here, 65, go across, that's what they'd give us. They would actually give us $10.05. So if you take 65 and take $10 off, that's 55, obviously. So in actual fact, we're already ahead. As soon as we do that deal, we're ahead. What we expect to happen, and what happens in 80% plus of the cases, is the price will rise and it will go above 65. They won't want to sell them to us. We'll simply keep our $10 per share. That's how it works. That's where we make most of our money. Any questions on that? It's a big thing. People don't realize you can do it. Only 5% of the people in the markets actually do this, and most of them don't actually know what they're doing. So we do pretty well with it. What else? Well, we collect dividends, so if those shares are put to us, we collect dividends just like anybody else. As I say, that's the lowest of our income generators. But here's the next one. We get paid to sell shares. Going back to that example with Fluor, if we own them, we bought them right now, in fact, or they were put to us at $23.15, we could promise to sell them again in a month's time for $25, so we'd get a good increase on that. And for making that promise, we would get $1.20. So that's why that is our second best income generator. I think I might have an example of that. Yeah, here's one. So back to that BlackBerry. And a BlackBerry, if we were to buy BlackBerry shares right now, we could get them for $11.10. BlackBerry, I should say, what they actually do these days is they produce software, particularly for artificial intelligence and in the motor trade. So that they're really huge in the future of electric cars, but they also produce components that go into iPhones and things. And they have an absolute fortune in cash in the bank. It's a very, very wealthy company. So they suffered with, because they tried to take Apple on in the personal organizer and phone market, instead of sticking to the business market, which is what they probably should have done. But anyway, we can currently buy them and pay $11.10. As soon as we bought them, we can actually say, I tell you what, we've just bought these, but would anyone like to buy them off us in the next month for $12? And if they would like to, and we'll always find someone, if there's a price on here, it can happen. So we can take 86 cents for that trade. So we'll get 86 cents right now, as soon as we do the deal, and that goes in our pocket. The worst case is that we're going to have to sell these shares in a month's time for $12. So we'll make $1 from the, or 90 cents at least, on the price increase. And we've also got 86 cents from the premium for making the promise. So that's 0.86 plus 0.9, $1.76 divided by $11.10. It's a percentage. That is 15.85%, and it will take a month to do it. Now, what we know is that BlackBerry is a very stable but volatile stock. It just moves up and down an awful lot. If I go back a few slides, we can actually see what it looks like. That's BlackBerry. So it's forever going up and down. And here it's going between $9 and it's heading up towards $12 at its top. It just bounces in between these all day long. So if you buy the shares at the bottom, we could have, which is what we'd normally do, pay sort of $9.50 or something for them, wait until it gets to the top, then sell the promise to sell them at the next price up, and then away we go. And that's how we make a lot of money getting paid to sell our shares. Where do we find it's all right, but we happen to know about BlackBerry and Fluor and Western Digital. There are something like 30,000 shares out there that you could trade. So we have to find the right ones. And for that, we use something called Value Line. And Value Line is a research company set up in 1929. They don't trade at all. All they are honest brokers, honest suppliers of information. So they make forecasts. So they're forecasting that BlackBerry here will live at about $10 over the next 18 months. That's what they're saying. We're happy enough with that. They give us lots of information about the finances of the company. And on the next slide, they give us a full report. All of that is going back years and years on BlackBerry. That's where we find out what sort of debt they've got, how much they've got in the bank, how volatile the stock is. We find out about any lawsuits that they're facing. We find out, for example, how good the management team are. One aspect of that is how good are they at predicting what their earnings are going to be for future periods, and they're very good at it. So we start with a lot of information. We definitely don't use the TV. We definitely don't use the newspapers. Anything that's published about these companies has already been taken into account by the market. So we buy in the very best research that's available. And that's a key to how we do so well. We're always told that the stock market is risky. To me, putting £1,000 in the bank and getting 1% and it taking 72 years, if you're lucky, is the risk. This isn't a risk at all to me. But the ways, some of the ways, and there are actually lots of them, some of the ways that we get rid of that risk is, first of all, we diversify. So by that, I mean, we only have at any one time a stock in 5% of our value in any one industrial sector. So if we've got money in telephony, we'd only have 5% of our money in it. If we've got money in, oil, again, maximum 5%. So we spread ourselves across a wide range of sectors, and not all sectors are up or down at the same time. We also put protective trades in. So once we've made those promises, we actually put another trade in, which helps to eliminate all of the risk. So if we're promising to buy shares at $65, for example, we will then put a trade in to buy the opportunity to sell them again for $60, irrespective of what happens to the price. So our maximum risk would therefore be $5, and we will get more than $5 in premium for making the promise. As you saw when we looked at the example with Fluor, we don't sort of say this stock is going to rise to $75, and therefore we'll sell promise to buy them at $75. We go about halfway up, $65 in that case. Now those trades, there are 7 possible outcomes. I should say there are only 7 possible outcomes, and they all make profit. Now that sounds crazy, but it is the case. So every possible outcome when we promise to buy shares is a profit. Some of those outcomes are more profitable than others, and some take longer than others to actually come about, but they all end up in a profit. And I can actually say that since we started trading these clubs, T's, which is now 24 months ago, we have not had a single losing trade, and we don't expect to have any ever. And that's because we're basically not giving them the chance to go wrong on us. We've always got a solution, a way out. We keep a lot of cash. So Sapphire up to now has, it hasn't actually spent any of the money that's been put in. So we always keep a lot of cash in these clubs. So if somebody takes up the promise and asks us to buy the shares, we can cover it. We just always have a lot of cash. We're not good at spending. We're good at promising to spend it, but we never actually really get around to it very often. So our clubs have now been trading for 2 years, and between them, I haven't actually counted over. This is a bit of a guesstimate, but I think we must have now done 1,000 trades, including ones which are still in progress. So we haven't lost on any of them. So we seem to have got something rather right here. Questions that I frequently get asked and which you may be interested in. So first of all, the members can access the back office, so they can go in and see what's happening 24/7. Everyone's got the passwords. Everyone can get in there. They can see what stock we own, what trades we're in, how much money we've got, and everything else. So they can see the full detail of what we're doing. We keep banking and trading separate, and that's for security purposes. So there are other traders involved in case I go into the proverbial bus or have the heart attack. But traders don't have access to the bank account. And how this works is the banker, which is usually a club member, which is always a club member, they can send money from the bank account to the trading account. They can't get money out of the trading account back to the bank. I can only send it to the bank. but I can't get it out of the bank. So that's as good as we can get it. But if anyone can sort of come up with a better way of doing it, then we're happy. So we keep them separate. As I say, we've not had a losing trade for over 2 years. And members can add or withdraw funds to this. So the club, you can put money in. You can do it on a sort of monthly basis. Some people put in £100 a month. Other people have put sort of 50,000 in a single go, and so on. We have got people who have got millions in as well. And they can actually get to the funds. Formally, we say, we might want some notice, please, because the trades that we go into are 90 days long in most cases. However, because we always keep a lot of cash in the account, we don't normally have to impose that. I say don't normally. We've had this week the first request in now 2 years for somebody who actually wanted to take some money out. They needed some money for something else. We had to go and find out how to do it. We didn't even know how to take the money out. But anyway, he certainly didn't have to wait for his money. We meet monthly. We have a Zoom meeting, and they're all next week. So all 4 clubs are meeting next week. Again, anybody who's not already a member who'd like to attend any of those, or even all of them if you wish, let me know. You can come along. You'll see other members there. You'll see us trading. You'll see us making decisions. Each of those lasts probably less than an hour, and they're all recorded. So it's a Zoom meeting and we record it. And that's kept for the members to be able to see. So it's a record of the decisions that we've made. So it's far better than minutes. It actually is a record of the whole meeting. Although I do edit out some of the stuff, the laughing and the wasting of time and waiting for computers and stuff. All of the main stuff is kept in it. All of our members do undergo some training. We don't expect people to understand those 4 ways of making money that I've just been through. We actually provide some training on it. It's online training, videos basically. You can go through them. We encourage people to go through them, but you don't have to. And you can ask questions at any time. The idea behind that is, one, that you understand what we're doing, and again, understand how we mitigate risk and how we make the money we do, but also so that you can meaningfully contribute to the decision making, or at least understand what's happening. So that's available. As I say, we've got about 250 members now, and you can speak directly to any of them, and we don't moderate the communications. So you can verify what we're doing. Can even let you in to the back office of the accounts if you want to and have a look. No problem. Stop sharing. That's the sort of presentation that I wanted to go through to basically outline what we do and how we do it. I'm very happy to take any questions anyone's got. Simon, is there anything that you think that people might want to ask that I haven't covered?
Yeah, about regulation.
We are regulated to a degree. We're not. You won't find us on the, the Institute of Finance or anything like that. But that's not how it works. This is a club, and it's a democratic club. When you put money in, you're not putting money into me or my company or our company. It's going into the bank account that the club owns and controls. The trading account is also the club's trading account. I am helping with it. I'm coaching, I'm training, I'm looking after it when you're not available, but I try and keep the main decisions to the club meetings so that they can be more democratic.
My question is this a pooled investment? And how does it work technically? I mean, if I invest £10,000, I get what, a percentage share of the pool?
Yes. So yeah, we are pooling our resources. We're all members. I'm a member too.
Yeah.
We all put our money in, and how I work it is like a unit trust. So if 2 people put the same amount of money in on different dates. So let's we take the profit quarterly. So if somebody puts money in on day 1 of the quarter, it's about 90 days in the quarter. If somebody else puts in 10,000 on day 90 or 89, then they're not going to get the same proportion of the profit. So one of those will attract 10,000 90ths, if you like, and the other will attract 1/90th of the, and then in proportion to the amount of money they put in. So if somebody's only put 1,000 in, they will get a tenth of the money that someone has put in, where they put 10,000 in on the same day. So it all works in proportion to the amount of money and the number of days that has been in there. It took me a lot of working out, but eventually I got the spreadsheet. It's actually quite easy now. So now the treasurers send me the monthly bank statement, and I simply have to go through it for the date on one axis, the name of the member on the other, and put in the amount of money, and the rest it automates it. So they get a number of units, and that's how we work it out.
So it's unitized. It's a unitized pool.
It is.
Right?
It's unitized solely for the purpose of making it fair in terms of the amount of money that people put in and the timing that it's in for. And that's the best way I could work out how to do it.
So if I put 10,000 in today, I get a unit or two, or a fraction of a unit, or 1 point.
What you would get, where are we? We're up to, I'm looking for Sapphire. Here it is, Sapphire. So Sapphire, we are on September, November, here we go, November, whatever it is, it's November the 10th. November the 10th is day 71 of the quarter. So if you put 10,000 in today, it would be 10,000 times the length of time left to go in the quarter. So that would be I think it's 91. So it'd be 10,000 times 20. That would then give you a number of points and a percentage of the profit made in this quarter. That profit would be added to your 10,000 for the beginning of the next quarter. And then that 10,000 plus the profit would be in for the whole 90 days of that quarter. So the points you would get then would be 10,000 plus the profit times 90 days, or whatever it is, 9091. The club has its own website. We put the websites together on one site, and they're at Smart Investments with an S on the end, smartinvestments.ai. So on there, you can do a number of things. That's where the training lives. It's where the club pages live. And it is where you can join. So there's a tab on there, join a program, and you go on there and simply fill the form in. Someone was saying the other day that it isn't secure. It is. It has got a security certificate. I know because I paid for it. And that we do not keep any information on there. The form comes to us. We use it for regulatory purposes. So we would need, for example, proof of identity and proof of address. And after that, it's not on the website. We don't leave it on there at all. That's also where we keep the recordings of the meetings. So you can go on your club page and look at the previous recordings and see, oh, he said this or he said that, or what's happened here. And that's how we do that. Also on there, you can contact us through there. So if you've got any questions, you can, there's a contact us page. So we're happy to answer questions all day long, no problem whatsoever. And generally try and give very full and frank answers on it. What else can I say? Anything?
Yeah. Can I ask a question?
You can, Graham, yes.
The first slide you put up showed the performance of the 4 different clubs.
Yes.
They're obviously at different stages of development. Are you able to put a forecast against them based on the trends that they're following? I know you talked about one being 100 odd %, another 50, Sapphire 37.5. Are you able to adjust that with each quarter?
Yeah. Oh, yeah, definitely. Absolutely.
Just one other thing, I know from the previous meeting I attended that you're now doing individual statements at the end of the month based on the contribution, which I think would answer Martin's.
Yeah, we do. So Each month we produce now something called a dashboard. So the dashboard is really a summary of the trading account. So it gives all of the, any stocks that we hold, and you can see all of the trades we've done, how much money's gone in, how much money it's worth, and so on. And I've now produced a tab on there, which I try and anonymize. Hang on, I can't say that word. Anonymize to a little bit. So I haven't got your name there, it's just got your initials. And it's only open to the other club members. And on there, you will see the money you've invested, so you can check that for one thing. Secondly, the profit that you've made in the quarter, and anything else that's in there that's pertinent to it. And that will now be updated monthly. As far as predicting or forecasting goes, it takes about 6 months to get this, you might call it a profit engine, running smoothly. So it takes about 6 months to build a pipeline. So for example, the trades that we do are generally that the options expire in 3 months, 90 days. So we need to go through a couple of those to get the thing up and running. But once a club is up to that, and it can take 3 months to 6 months or whatever, then we should be looking at around 100% per annum. And that's an interesting debate in itself. How on earth do you measure it when you've got different money going in on different dates? I do it in 2 ways. One, I look at what would happen to a single pound invested on day one. How would that have fared? And 2, what is the average money that's been available to trade during the period concerned? So if someone stuck 100,000 in on the last day of the quarter, obviously that would distort things. But if you looked at it in terms of the average amount available to trade, it wouldn't distort things very much at all.
And how do you decide what the amount of money to trade is? Because there's quite a high cash holding in each of the clubs. So the ratio you're looking at there.
Yeah, what we do is we keep in readily available cash at least half of the club's value.
Right, good.
Yeah, at least half is always in cash. It's called the stock buying power, and that's what we can spend. There's usually a lot more cash in it. I'm looking at Diamond, for example. That's currently got 505,000 in cash, a net value of 495,000, and stock buying power of 259,000. So we've actually got a lot of stock buying power that we can still use in there. There's never a shortage. In the early months, there can be. We also so the forecast will vary depending on how long the club has been running. If it's in its few initial months, then it takes a bit more getting going. But on the other hand, when we open a new club, and I still class Sapphire as a new club, then when we're looking at the potential trades available to us, which we look at every week and update every week, then it's fresh. All of those trades are available to it, and it can pick out the best of them. If the club is established, has been running for a year or something, then it's probably already in some of those stocks, and we don't want to exceed our 5% in any one sector. So it will have some limitations on which ones it can choose. So new clubs get an initial advantage until they settle down a bit. But I work on 100 established club, 100% per annum. End of. That's it. That's where I work to. If I'm not doing that, then then I'm sort of not sleeping, and that's. I'm not sleeping because of you, not me. I'm all right. Sorry, so I'm seeing questions coming up. I probably need to look at the chat. There are some questions in the chat. Where's the chat? Here we go. I'm not used to look at the chat. I don't know how to do that. I'm going to put my camera to one side a bit. So, chat. We trade US dollars only. We use that's Simon. We are trading the US market, so we trade in dollars. We use a company, VFX PLC, huge currency trading operation in London. They are the currency trading people for the Royal Bank of Scotland. So we get the same rate as the Royal Bank of Scotland, not a customer of the Royal Bank of Scotland, the Royal Bank of Scotland. So we get very good currency exchange rates. And as I say, we can only do this type of trading in the States. One, because of the type of trade is not available here. Two, because the costs of trading in the States are less. Three, because the information on the companies is available in the US and it's not always available here. How many clubs are there? There are currently 4. There's another one kicking off at the moment, which is called the 100th Millionaire Club, but that is exclusive to a group of a networking group. They're having their own club, which any of you could do also. If you want to start your own club, we can help you do that. You become a member by going to the website and using the Join a Program tab. Tax, so that's an interesting one. So tax. So there are 2 types of trades involved here. If you are buying and selling shares, that's a capital gain. And everybody in the UK, and not everyone is from the UK here, has a £12,300 annual allowance over and above their income tax allowance that they can use for capital gains. So in other words, on that type of trade, you got to do more than 12,300 in profit before you pay any tax. If you make it a joint account, or 2 of you traded together, partners, husband and wife, whatever, then you're going to get 2 of those allowances. So you can make a lot of money. The other tax you would pay is income tax, and we can't sort of avoid that. At the end of the year, excuse me, the trading platform produces tax information for us. So they will actually give us a printout of all of the trades and what's involved. So you don't have to go through it and work it all out trade by trade. Sort of investment levels that we're looking for, well, that depends who you speak to. I like to keep the minimum low. We've got members who are, for example, fire officers, police officers, NHS people, and they are just repairing their pensions. Their pensions have been hit by changes. They now retire later. They have to put more money in and they get less of a pension. So some of those people, by putting in just £100 a month, depending on how long they've got to retirement, are repairing that. So they will end up retiring when they originally expected, probably with more money than they originally expected, and they're better off. So I'm repairing pensions with it. So I like to keep it low. At the other end of the spectrum, we have got people who put in like 100,000, 200,000, all sorts of large amounts. Sometimes they prefer to have their own account, and we will coach them in trading it. But to be honest with you, they don't make any more money than the clubs. They're in the same trades. They just don't get the benefit of the experience of all of the members, and they don't get the benefit of spreading the trading costs between all the members. But if they want to do it, they're welcome, no problem. We'll help anybody. So what about non-GP based people? We have members already in New Zealand, Portugal, Holland, Belgium, Spain. I might have even missed some out. Not a problem. What they can do is send money to the VFX in the currency of whatever they've got. If it's New Zealand dollars, wherever it is. So it doesn't then get converted into UK pounds and then into dollars. It will go straight from New Zealand dollars into US dollars. We can accept, as long as there's no regulatory reason. I don't know whether, for example, in China, they might not allow people to be members of these clubs, but as long as your local laws allow you to be in, you can be in. I am key to the operation of the clubs. What happens when I go under the bus? We have got 2 other main traders, Owen O'Malley and Anna Rodriguez. They are at least as good as me. I can't really say that. They're very, very good. And a lot of people would say they're better than me, and I would say, okay, let's have a competition. And even beyond those, we've probably got a dozen other people who are ready, willing, and able, who are trading other groups of clubs who would step in and make sure that everything's all right. So I am allowed to go under the bus. Everything we invest is in US dollars. Again, because we just can't get the information on the companies and so on. There are actually lots of other clubs that I'm not involved in, for example, Sweden, Finland, Africa, all over the place. There are lots of clubs. So how do you know which you can, apart from the one that's exclusive to the members of the networking group, you can choose your own club, and we can help you do that if you wish. At the moment, we're directing people towards Sapphire, simply because it's the new one. There's another thing. I like to keep the membership at not too big, sort of 50 or 60 people. And the reason for that is that with that sort of number of people and the amount of money they tend to put in, we are below the radar of the brokers. So if we were all in one big club and investing huge amounts of money, the brokers would see that. I'm on about the actual trading brokers, and they could take advantage of us. At the moment, we are below the radar, insignificant. They're not going to change any prices to try and catch us out. So there's a benefit to being spreading ourselves across a number of clubs. So that's what we do. There's usually a reason for most things I do, and that's the reason for that one. I mean, my life would be easy if you're all just one club. If we were all in one club, I would only have one account to trade or to help trade. We encourage, I should say, we also encourage other people to get involved. We do want to go through training and understand it. Very happy to put together sort of trading committees and to work with those on behalf of the clubs, and also to work with individuals who just want to trade their own pot alongside a club. So we've got people who are in a club who also have their own trading account that they then trade by themselves, and we help them with it. Everybody can have a demo account, which you don't put any, it doesn't cost anything. You don't put any real money in it, but it behaves like a normal account. The prices are the same, the trades are the same, and so on. So you can actually trade on the demonstrator account for as long as you wish, to prove to yourself that you can do it, that it works, that you can make money at it. And at that point, you can then switch to a real account with a small amount of money. You need, if you're going to open your own account, you need a minimum of $2,500. Below that level, you can't do the call options. And if you want to do the put options where we're promising to buy stocks, you got to have a minimum of 25,000 in. We've got people who are addicted here, who are in more than one club. In fact, with the exception of the one that's now for the networking group, and even that I'm not sure about, we've actually got people who I think are all four clubs. I don't know why. They're just.
But my question is, do the clubs perform differently, or do they all perform the same?
Over time, they will perform at about the same. So when they're not mirror images. So you'll find the portfolio of each of the clubs is different. We have a long list of about 150 stocks that we are trading with. They're the ones that have passed the filters on quality and on value, so that they're good value for money. But then it's a question of timing. So you might get it. It's great value for money, but it's a high at the moment. Or if it's low, then it's great. We go for it. So the clubs will generally have a different mix of trade within that 150 or so. We regularly do add new ones. We've just added Western Digital Corporation in fact, to it. And American Cheesecake went in last week. But that's about the number we play with. And at any one time, the bigger clubs generally have about 50 trades, in progress at any one time. So they do vary. They vary a lot. But after the first 6-7 months, the performance tends to be about the same, 100% per annum.
So is there an advantage in having an investment in a number of clubs, a bundle of clubs, or a basket, or just it makes no difference?
I think it makes no difference. If you were in an existing club and a new club started, then because of that early days advantage, you might then say, oh, yeah, I'm going to put somebody in that and take advantage of its early days. But after sort of 6 to 12 months, it's evened out. We're looking at the same potential pool of trades every day for all of the clubs. It's just that different clubs are already in a trade or have got money available or haven't got money available and what have we. So they all tend to be a different mix. It's not the end by any means. As I say, www.smartinvestments.ai, contact number, my address is on there, and the contact thing for questions. More than happy to answer anything. Or indeed, if anybody wants to have a sort of one-on-one Zoom to look, we can actually look at a real club and do some trades. I'm open for that too, no problem.
Yeah. Quick question, Jeff, just on what's your general opinion on, I guess, the market? Because probably like a lot of people, I invested money last year for when the FTSE was low, and just my simple logic was it's going to go back up. But is that kind of a one-off opportunity? Do you think the market's going to be strong? How do you see the bigger picture?
Well, I'm far more familiar with the American markets and the S&P 500, for example, and the Dow Jones 30. But it's the same story. We sort of measure ourselves against the S&P 500. We like to sort of think that we beat that. So that's the S&P 500, and you're looking at their sort of July up to now. They're my tram lines all over it. But if I zoom out, I'm going back there. That takes us on 2016. But to be honest, I could go back to 1950 and it wouldn't look very different. There's the pandemic. There's the recovery from the pandemic. So that went down in sort of April, May. By January, it was sort of higher than it had been before. There's a little fall last week. That was the American government messing about, not wanting to pass the legislation on the infrastructure bill. Then it did, and then we took advantage of that too. In the long term, inflation and performance, the thing just goes up. We get short-term dips. Pandemic was a huge one, but you get them with wars, expectation of wars, you get them with all sorts. But as long as we stick to fundamentally sound companies that are making profits, then we're not worried. We get there. So we don't worry about short-term fluctuations. Yeah, I mean, people come along and say, sorry, go on.
I think it does answer it, but it kind of, I'm just trying to make the correlation, because during the start of the presentation, you were talking about the agility. You could make quick trades based on the short and long term, or the short term fluctuations, it seemed. So I'm just trying to kind of help it make sense in my mind.
Oh, well, yeah, I've only, it gets very complicated. It's not actually that complicated, but it gets complicated for people that haven't heard it before. The question really is, what happens if something goes wrong? So we promised to buy a share for $60 in 3 months' time, and it's currently at, say, $40. And the price of the share goes down, not up. So we're now left with having made a promise to buy the shares for $60. And we don't like that promise anymore. So we've got two things that we can do about that. One is we can buy back the promise, which can be quite expensive, but we can buy it back. But as soon as we buy it back, we then sell another one for a later date. And for doing that, we get an extra credit. And we can actually do that forever. So we can just keep buying it back, sell a later one, get a credit, buy it back, sell it on again forever. So that keeps us away from having to worry about taking a stock at $60 if the current price is 40 or something. The other thing that we can do is we can actually allow the stock to be put to us. Let's say it's put to us at $60 and the current price is 40. We will have had some premium, so we might have had, say, $10 anyway. So our exposure is 10 rather than 20. We can then sell that share at the current price of 40 and then sell another promise to buy the shares. And as long as we get more than that $10 difference for it, we're in the black. So in other words, we always have a way out, and we're very good at finding them. Now, that, as I say, that's quite a lot to take in. But take it from me that we generally, well, we always do have a way out. Doesn't matter what they do to us. Okay, thank you very much for attending. I hope you do go on to join us, or at least to find out more about it, or even if you just decide to keep a watching brief on it, that's absolutely fine too. And if and when you're then comfortable with it, it's always there. The stock market isn't going anywhere, hasn't changed, won't change. You can join us at any time. It's just that the earlier you do it, the more money you can actually make, the more time you've got until you need it. We've got plenty of people who are looking forward to retiring, and they ask me, oh yeah, I need 5,000 a month. How much do I need to put in order to get 5,000 a month? Well, the answer is you need to have in about 100,000. And depending on when you start, you can build that up. So you can start with 10,000 and just build the profit up to get to 100. But basically, if you think in terms of being able to take 5% out per month into the future, then that's how you can work out how much you need in. And we've got plenty of people who are happily working away with that in mind. We can also help people to do this themselves within a self-invested pension now. We've just found out how to do that. Terrific. Thank you very much. Good night all. I'm a little hoarse. I don't normally talk this much.